I'm going to hit record. Okay, welcome everybody. My name is 𝗟𝗲 𝗍𝗲𝗂. I'm the founder of 𝗃₁₃ Mastermind in Nashville, Tennessee. And I'm so excited because today we have one of my favorite people in the world, Dan Mossakowski, who specializes in 401ks for businesses, among other things, all things financial related. And Dan is going to talk to us today about tax credits for companies that want to offer 401ks for employees. So Dan, what do you have to share with us today?
Well, first, 𝗟𝗍, thank you very much for just giving me an opportunity to talk about something I'm very passionate about, and which is 401k, but also more importantly, just trying to help people, prepare for retirement. Many times we're so busy doing things on a daily basis that we just don't, when we're building a business or we're working, we're not always thinking about retirement planning and things like that. And we've heard this whole thing from our parents before about if I'd have just done this, right? And this is an opportunity for me to talk about something I'm very passionate about, and I've seen it through people who've spent time getting a little bit of time getting to know about 401ks and retirement planning and things like that. And my passion is for small businesses. I'm a small business owner myself. And so I really love just being a part of this. So thank you very much.
You're welcome.
I want to make sure, let's see, you're going to show me, I need to share my screen.
Mm-hmm.
And let's see here, there it is. So we're going to share. This screen. And do you see my screen okay?
Yes.
Okay, great. I'm going to go ahead and start the presentation from the beginning.
And just as a quick side note, today we're gonna learn about 3 tax credits that are kind of like not really well known out there. Is that true?
Yeah, well, it's true in the sense that most people don't pay attention to this with the signing of Secure Act 2.0 back in December of 2022 by President Biden. There was 94 provisions in this plan, and these are a couple that are hidden. And most people, what today's idea is about is trying to help people understand that there are ways that you can start 401ks or retirement plan for your employees, and it may cost you or could cost you almost no money whatsoever for the first 5 years, or very little.
Wow.
And so this is an opportunity for people to kind of understand that, if you will.
Yeah.
And the beauty about this is that it's really not hard to do. The screen, I know my screen right now is kind of split, and I hope that's okay.
Yeah, that's fine.
Okay.
We're good.
So today we're going to talk about Secure Act 2.0. I literally have 4 slides, really 3 that have information on them. The first thing we're going to talk about is auto enrollment tax credit. So in a 401k, as of January the 1st of 2025, any new plans that come into being have to include a feature in the plan that's called auto enrollment. Well, in that Secure Act provision, what the government has also done is said, well, we're going to give you, for auto enrollment, for you to put money, for you to sign your employees up automatically. And this is kind of a little bit of auto enrollment kind of sounds like you're making everybody do this, and I'll get to that in a minute. But they will give you a $500 tax credit for the first 3 years of putting that provision in your plan. And oh, by the way, on January the 1st of 2025, it's mandatory. So that's something that most people don't think about, $500. Well, that's a significant amount of money. So these are for plans that are for 50 employees or less for the first 3 years. So in auto enrollment, the way it works is this, is that every new plan coming forward is you put this auto enrollment feature in. Every employee then gets enrolled unless they physically or they tell the company they want to opt out. Okay, so they still do have the opportunity to opt out if they don't want to put money into the 401k. But I always do it like, I always kind of suggest it like this. If an employee just puts in, if an employer is at matching, say 3% or 4%, then what that allows is that this employee may be giving up 4% of their salary without getting it if they're not putting in at least 4% into the 401k. So this auto enrollment feature, what's happened is that this has been around for many, many years. So this isn't the first time this has happened. It's been around for a long time. And what they realized going through those years, the 10 or 15 years that it's been around, is that it's real important that employees, when they get put into the plan, that many of them never opt out. So the minimum that you want to put in for an employee on auto enrollment is 3% in order to get this $500 tax credit. And then it also has to auto increase every year by 1% up to 10%, 10 to 15%. Okay. But you get that $500 tax credit. That helps. This is a big step towards really kind of encouraging employees to save for retirement. Now, I want to stop here for a second because this is really important. In order to provide, so I want to go back to, for just a second, Tracy, and talk about a couple of things. Number one is the benefit for 401ks. A lot of small businesses will go, well, you know, I'm not big enough to have a 401k. I don't really want to, do this. This is too much for me on my plate. And these tax credits are specifically focused on companies that have, up to 50 employees. So this is small business companies. And I did a little statistics. There is actually 6.1 million companies in the United States, in just the United States, as of 2019. And there are only 600,000 401k plans in that same time period. So think about that.
So of those 6.1 million companies in the US, is that 6.1 companies with under 50 employees? Or just
No, that's all companies.
Wow, and only 600,000 of them have 401ks. Okay, all right, gotcha.
That's correct. So what's happening is, and they've seen this shift, that employees are starting to look at companies when they go work for them. They're looking at their benefits. They're looking at the benefit that they can get for a company to work for. And so this is where, health benefits and vacation benefits, and specifically 401k benefits or retirement benefits, make a big, big difference. And there's a lot of ways you can get a 401k. So it's not like you have to use an advisor, or I recommend it because of one thing, that you get professional management. What other smaller businesses don't really understand sometimes is that this is a fiduciary act by placing a 401k for their employees to put money into. And by that being fiduciary act, that means that the business owner or owners are liable for that retirement plan. So you can go into, and this means disparaging companies like ADP or companies that provide payroll or anything like that. They usually offer 401ks through their company, through their payroll stuff. And there's nothing wrong with those plans, but they're very kind of canned, if you will.
Mm-hmm.
Okay, so if you use an advisor that's doing this for a living, you typically get a better designed plan that's designed specifically for your employees. It's monitored, it's tracked, it's all those things. So anyway,
Dan,
sorry, I kind of
no, that's okay.
there a little bit.
Can I ask you a couple questions for people watching this? One, is the $500 credit each year for the first 3 years of the plan, is that per employee?
Oh, great question. So it's $500 total. Okay, so if you have one employee, two employees, or 50 employees, it's $500 total
Okay. Okay.
for that auto enrollment tax credit.
Okay. And then you said that by offering a 401k plan to your employees, that is a fiduciary act as the business owner. So it's on my it's my head on the plate, basically, if I'm the business owner and I'm offering that. Is that new?
No, it's not new. It's something that's been around for a long, long time. And I know that might be something that sounded like, oh man, well then why would I, provide a 401k? Well, the reality is this, is that employees are looking for those types of benefits when they're looking for a company to work for.
Right.
And it's almost become a normal that companies really need to provide a retirement basis, something that employees can put money into.
Right.
There's a lot of design features and things like that that you can make it, a really good plan by design.
Right.
But
So
the fiduciary act is the fiduciary liability is still there no matter what.
yes, and I just wanted to pause on that for a second, because if I'm a business owner and I've got people counting on me, knowing that this is a fiduciary act, I am surely going to want to make sure I work with a professional financial advisor to get this done. Um, because you and I have had separate conversations about what is required. Um, different types of meetings and things, which is not for this presentation, but maybe another one. So
Yeah.
anyway, I want the business owners who are watching this to grasp that, because having a 401k in place for your business is one of those things where you set it and forget it. And so anyways, thank you for that.
No, and that's a great point, Tracy, is that there's a lot more to it. That's why it's like, I hate to use this as an analogy. I say hate. If you have a cavity, you don't go to a plumber to go get a cavity filled, right? You go to a dentist.
Right.
So and that's it's kind of the same way. If you're going to use if you want a 401k, you want the best to provide for your employees. So
Yes.
go to somebody that specializes in this, right? And that does this for a living,
Mhm.
and they can provide you with the kind of service and the kind of design and plan and monitoring and fiduciary training and all
Mm.
those things that you won't always get with those kind of canned products, if you
Sources.
will.
Yeah. Okay, cool. So this is the first tax credit. All right, cool.
Yeah, so this is auto enrollment tax credit. So that's $500. Okay, the second one we're going to talk about is planned startup tax credit. So this is up to $5,000 a year, okay, maximum. And it includes any type of administrative or any type of expense as it relates to running the plan, okay? So the way this works is, and I have a calculator, I put that as the last bullet point, is that we can create an estimated tax credit calculation. I have actually tool that I can put in the numbers. There's just very few numbers. It's the number of employees, the number of highly compensated employees, and then and it gives us a total of what is estimated that could be a tax credit. So there's a lot more to it. Obviously our government, we love to make things a little bit complicated, but what I want to really project out to today is that you could get up to $5,000 of tax credit just for this one startup plan, and you can get that up to 5 years. Okay,
$5,000 every year for up to 5 years or
that's
5 years.
correct.
Okay.
Yeah.
What
So
size employee, what size, how many employees is required for this plan?
Yeah, great question. So this is 50 employees and less. So
Okay.
our entire presentation today is about 50 employees or less.
Okay.
Okay. That is kind of have been through research. That's really the fastest growing segment of new businesses coming in to the United States are 50 and smaller. So, which
Right.
is considered a small plan. So you can, that $5,000 is, that's a significant amount of administrative costs that you could be reimbursed on if it is up to $5,000. I'll tell you from my experience that most startup plans will not cost $5,000, but if it's free, if it's $2,500 or whatever that dollar amount is, if you can get it back in a tax credit for the first 5 years, why wouldn't you do it?
Yeah,
Right?
exactly.
I mean, it gives you the opportunity to get a retirement plan in place, a
Yeah.
good qualified plan, and provide a great retirement vehicle for your employees.
Yeah.
Great benefit. So the second point on this one is that applies to qualified plans only. So 401ks, SEP IRAs or SEP plans or simple plans.
And a SEP is a
A SEP is like a small business proprietor type business that you can do a SEP IRA for, and you can do those for several employees as well. These are probably not as common, and in some cases a little more boxed, if you will, as a SEP is that it becomes, if you will, then a 401k. Same thing with a simple plan is very much it's kind of a set and forget thing. But excuse me, but this tax credit applies to both. Okay. And if somebody was interested in doing either one of the other ones, we can talk through all the pluses and minuses and all that stuff of each one so that they make a good educated decision.
So quick question before you go to the final tax credit. In my experience, and maybe this is just my experience, sometimes CPAs maybe don't give advice on this kind of thing. They do the tax return, file the forms and things that they need to do for us as business owner. But if someone were interested in exploring this, would it make sense to have a meeting with a professional financial advisor and their CPA working together, or is it one or the other? What are your thoughts on that?
Yeah, so there are a lot of, listen, I work a lot with CPAs and for different firms and different things. And I absolutely agree with what you just said. It is a great idea to have your CPA involved in this conversation. A lot of them, and not to their misunderstanding, a lot of them are so focused on tax stuff that they're not really paying attention to this, right? Because Secure Act 2.0 is mainly focused on retirement plan stuff. So absolutely, if you have a CPA that wants to get involved in this is a great opportunity for them to learn as well. And they may have other business owners that they work with, that could use the same kind of strategy. So
everyone remembers the person that helped you save money.
Amen. It's like, listen, the tough thing about this is that we have become so specialized. I mean, think about this. In the world of medicine, right? In the world of medicine today, your primary care physician is just the person you go to if you're sick or whatever. You go to them, and then if you have an ache or pain in your knee, you go see one person. If you have an ache or pain in your back, you go see somebody else. And not to make a comparison to a doctor by any means, but the point is we become so specialized that in all of our business world, we become so specialized that it's almost imperative that you have somebody who really knows how to do 401ks to do it the right way.
Yeah. And last question I have for you on that, Dan, is what if it's just a solopreneur and they want to set something up like this? What's the minimum number of, can someone who does not have employees reap the benefits of any of these tax credits?
Well, they can't reap the benefits of the tax credits unless you put in what's called the qualified plan, a 401k plan. And there are ways that you can get tax credits through solo Ks, that type of stuff. So yes, you can. If you're in a single employer with just one person, there are ways that you can get some tax credits for that. So yes.
Thanks, Dan.
Yeah. It might be different. Let me just kind of put a caveat there. It might be different because if you notice up here on this slide, I put non-HCEs. Okay. So a non-HCE is HCE stands for highly compensated individual or highly compensated employee. A highly compensated employee today is defined by anyone who makes more than $145,000.
Okay, good to know. Thank you.
Okay. Yeah. So this is the purpose, the reason why I put that last bullet point, which is we can do an estimated tax calculation for you, because you just don't know until you figure it out. So,
right.
And by the way, and I hope I want to share this with the people that are going to listen to this and listening, is that this is not a sales tactic. This is just an opportunity. I'm not going to gather your information and start bombarding you. This is an opportunity for you to learn and become a little more educated about what you can and can't do in this realm. So,
right.
And then the last thing is startup employer contribution credits. Okay, so as it relates to this, it's real simple. It sounds more sophisticated than it is, but again, this is mainly focused on employers with 50 or less. So if the company matches, say, 4% of your employees, let's say you have 10 employees, and you match 4% of, if they put in 4%, you put in 4%. And the government, what they will do is they will give you up to $1,000 credit for your contribution as the employer to your employees. So let's do a short little example here. And I didn't put this on the slide, but we can kind of walk through this pretty simply. If you have an employee that's making $40,000 a year, and they're putting in 4%, which is $1,600 a year, and you're putting in 4% for them as a match at $1,600 a year, the government will give you $1,000 back for that tax credit.
Wow, that's awesome.
Okay. Yeah. So if you have 10 employees, and we'll just use this as an example, and they're all making 40,000, then the federal government's going to give you $10,000 back. If they're all putting in 4%, you're putting in 4%.
And is that a one-time $1,000, or is that an every?
So for the first 2 years, it's 100%, $1,000. For the third year, it's 75%. So they'll give you $750 in this example.
Got it.
The fourth year, they'll do $500, and then the last year they'll do $250.
Cool.
So that's a significant amount of money over a 5-year period.
Absolutely.
Yeah. I mean, so this gives you the opportunity to build a really nice plan for your employees without having to worry about, how am I going to pay for this? Well, you're going to get part of that money back.
Right. So would a business owner, would a company get one of any of these three tax credits, or could they get all three?
They could get all three.
Wow, that's awesome. And does this apply to nonprofits also?
That is I would love to be able to answer that question. I don't know the answer to that one. You stumped me on that one.
Sorry.
No, that's an easy one to research, though. I can find out.
Yeah.
As long as my understanding is, as long as it's considered a defined contribution plan, a 401k plan, if you will, it should apply. Now, for a nonprofit, nonprofits don't pay taxes anyway.
Yeah, that could have been a silly question. It may not even apply to them, but thought I would ask.
But I don't. There might be some other way that they could take advantage of some type of a credit, right? So
yes.
Okay.
So
yeah, and then the last slide has my information on it, has my phone number and my email address. If people have questions, again, you know, it's not going to be a sales tactic.
No, no.
Love to answer any questions people have. This is my passion. I love to educate people on 401ks. I'm one of those 401k kind of nerd guys. I love doing what I'm doing, and I love to see how people, how it affects people's lives further into the future. And so, yeah, this is kind of my passion.
Yeah, well, I love it, Dan. I've learned so much from you, not just today, but in all of our interactions. And I want to wrap up today's session of 317 Mastermind Business Academy. Thank you so much for educating us on these 3 tax credit options for business owners with up to 50 employees. And thanks so much, and hope everybody gets a lot out of this.
Absolutely. Thanks, Tracy. Have a great day, and I appreciate the time.
You too. Take care.
Bye-bye.
Bye.